Micromanaging your trades can be very dangerous, but when done right, it's a great technique to maximize your profits and minimize your losses. And in today's video, I will show you the techniques that I use when I'm macromanaging my trades to make sure that my losers are as small as possible and letting the winners run. What's up everyone and welcome back to the channel. If you are new around here, my name is Jonatan Randin and I am a professional crypto and forex trader. If you like these short educational trading videos, make sure you subscribe and like the video. This short clip that you are about to watch is from within the RLZ Trading community, where I've just closed a trade and I'm reviewing this trade to show the members of the community how I've micromanaged this trade to make sure that if it's a loser, it's only going to become a small loser. Let me know what you think in the comments below. If you like this video, I will make sure to record more ones just like this one. So I just had this question from Crypto Khalifa right here. He asked me, he said that he noticed that I've been managing the positions much more actively after tweaking the system. So when starting this with this new version of the system where we exit fully at TP1 and have a slightly tighter stop loss, he's saying that he has noticed that I managed to trade more actively on the lower time frames, and that's very true. So I want to talk about that for a minute here and kind of explain how I'm doing it. So this is USD CHF. This is the trade that just hit TP here, and I changed the stop loss here and moved it a little bit more actively than I usually do. So yeah, let's take a look at this. So first, let's use the replay function here. Let's go back to the actual confirmation candle. So when I entered this trade based on this signal right here, so that signal, and then on the next candle on the 4 hour, you see that it goes below the 50, and this candle was like right before this candle closed, I decided to enter the trade. I believe this one is in the morning. I was just about to drop off my son at daycare. I'm like, oh, I'm not gonna have time when this candle closed. I'm just gonna enter 10 minutes or so before the candle closed right here on the 4 hour. And you can see on the 1 hour right here, like I believe I entered like on that candle or like right here. There's a massive bullish candle, and then it started trading upwards here, and this was when I started talking in the trading room about perhaps exiting this trade earlier. But I then said that, and I looked at the 15 minute and I said, you know what, price is using this low time frame resistance area as resistance, and as long as price can't get above that level, I'm not going to exit. But if price starts trading higher, I'm going to exit this trade. So that's one example of how I can exit trades earlier before the stop loss gets hit. And if you guys remember, in March I had a pretty massive drawdown, and one of the reasons why the March drawdown was only 3% or 4% was because a lot of the trades I took, I exited them much earlier. So I exit them around halfway to TP, and that saved me a lot during that drawdown. So I learned a lot from doing that in March, and I started incorporating this into my live trading. So the idea here was to look at the lower time frames, and if we had something like this, I would exit. Now that didn't happen. We instead hitting that level as resistance and then trading lower. And what I said when I saw this is, if price breaks down here, there shouldn't be a reason for price to come back up here and still be bearish. So still this trade would be invalidated if the price moves higher. So I said, if price moves below this level, I believe I had an alert below that wick. So this happened, we moved lower, and when this happened, I moved my stop to that red line right there. And I then said, if price moves down into like this area, I'm just gonna, like, if price just moves below this wick, I'm gonna move stops to entry, because now there's definitely not a good reason for price to move back up here. So this is where I put the stop loss, and then price starts breaking down, right? And then we have this. So when we have this, and this level is clearly being used as resistance, I then moved stops to entry right there, because now the whole idea is based on, you know, this up move, then this range and this breakdown, and then for price to move back down here, right? So price should absolutely not go above this resistance area. And if it does move like this, I believe the risk of seeing a move even higher back up to the weekly open to take out my stop loss increases dramatically. So I think it's better to exit the trade at entry and not lose any money if that happens. And then of course we have this happening. So this level was acting as resistance just like we wanted to, and we have stop loss above that resistance, and then price comes down and hits that TP. So this is just one example on USD CHF on how I like to manage trade on the low time frames, and I'm going to continue doing these videos for every trade I exit. I'm going to do a video kind of analyze the trade just like if I would do it personally in my trading journal. So hopefully you guys enjoy these videos.